Investing and theme parks. These are not two things that are often thought about in the same sentence. There doesn't seem to be an explicit correlation between the two of them. However, we're sitting here in Seville. We've just come back from a theme park. And as I was sitting on the roller coasters, I couldn't help but think and have a couple of reflections about how roller coasters and investing may actually share a few correlations together. Today we're going to dive into these. We've got 3 different insights and a bonus tip at the end, so make sure you stay for that one. But it's an interesting discussion. Hopefully you've been enjoying this new style of videos. Let's get into it. And so the first insight to take away is that both roller coasters and investing are most scary when we don't know what lays ahead and when we're unprepared. Of course, I'm sure many of you may have been on a ride like the giant drop, where you're sitting at the top, you're waiting for the countdown, but you don't know when it's just about to fall down and come through. However, at other times, you might have been on roller coasters at a fast pace, there's high adrenaline, the blood's pumping, but you can see where the turns are and where the curves are. They're not as scary. Of course, maybe you get that feeling in your stomach as it drops, but it wouldn't be as initially scary as something where you're waiting for something to jump out and pop out and really surprise you. And markets are the same. Of course, if you're not sure what's ahead, if you're not anticipating that there could be ups, there could be downs, when you see a correction or a sell-off like the one we're in at the moment, it might send a lot of fear and uncertainty driving through you. But when we take that step back, we think about it in context, that there's corrections every 1 to 2 years on the markets where markets sell off by 10%. Of course, we see bear markets intermittently, and every 10 or so years on average, when we look at the numbers, we know that markets enter into crash territory, down by 30% or more. If we're armed with this knowledge, if we understand the fact that markets don't move up in straight linear lines, but there's ups, there's downs, there's lefts, there's rights, and in fact we can never predict where the markets will head, well, this preparation will hold us in much better stead. The second insight has to do with herd mentality and the momentum. This is a bit of an interesting discussion actually. We were sitting on one of those pirate ship rides. I'm not sure if you've been on one of those at the theme parks. They go up and they go down and they build up momentum, and particularly if you're sitting at either end of the extremes of the pirate ship, as it moves up higher, you get that drop in your stomach and there's a lot of excitement. So we're moving up and down, and as we started to get to the peak of the ride, we were looking down. We had these kids who were sitting behind us. They were getting right into the ride, and every time we'd go up to the top, they'd go, whoa! And suddenly, as they kept on doing it bit by bit by bit, everyone else on the ride started chanting and cheering as well. And we all worked ourselves up into a fervour. And that really speaks to the excitement that we can have surrounding any type of venture or project. But also the same thing can happen on markets. When things are going well, when it's a bull market, you can see pockets of bullish tendencies or pockets of exuberance flow through into certain sectors. Or when things are down and out, when we're in a bear market or if we're in a bit of a correction, sentiments at all-time lows, it can be difficult even just to open up your portfolio because all you can think about is fear, uncertainty, doubt, and you have no hope or optimism about where things might head. So the most important thing is when we're thinking about the markets, to take that step back, to think logically and not emotionally, and to try and maintain our processes and systems despite the noise that always will flow through on markets. But that leads us on to the third insight. And that third insight itself, I thought initially it might be a little bit of a stretch, but the more I thought about it, the more that I felt like it did pertain to both roller coasters as well as investing in the markets, is the fact that we have the ability to learn about ourselves through the process. Of course, as we go through investing, we start to realize what we like, what we don't like, where our interests, capabilities, background knowledge, and experiences position us well to invest into and to really spend time researching. Some people might love the technology sector. Maybe your background's in healthcare. Potentially, maybe you like the retail space and you enjoy shopping and you understand how those consumer demands are. But the same thing can also happen on roller coasters. I think it's quite a personification of our temperament. Some people love the horror and the scary rides. Some people love the viewing and the scenic rides where they get to look out across the park. While others are just the adrenaline and thrill junkies and love zooming down and getting the G-forces up as they go down the rides. And so I think ultimately throughout whatever pursuit we're doing, whether it's sitting on a roller coaster looking out across at a view, or whether it's in the markets and diving into a new sector, potentially learning about new areas of the markets that maybe we hadn't touched, understanding new analysis tools, everything should be done with that lens of looking inwards, but then also seeing how we can benefit and improve our outputs. And then that leads us on to the bonus tip. And at the end of the day, this is such an intuitive, common sense one, but we have to enjoy it. Whether it's sitting on a roller coaster or investing on the markets, it's not meant to be like we're eating our vegetables and we have to force it down. There's going to be a ride for everyone and there's going to be an activity for everyone. Not everyone has to enjoy investing. Some people might prefer to just think about things like index funds or passive investing strategies, while others love the analytical component. They love the modeling out. They love the deep dives, understanding business models. We have to think about what suits our own individual styles, and we also have to think about what gives us joy. Whether it's investing or a different type of pursuit in life, we all have the same 24 hours in each and every day. So we don't want to be doing and spending time onto things that we don't enjoy just because it seems like it's the right thing to do. I know that when we go to theme parks with friends, sometimes I have friends who don't really enjoy the scariest of rides, the big giant drops or those where we do heaps of twists and turns. Sometimes I'll be like, yeah, I'll give it a shot, I'll try it out. But then after it, they just end up with a stomach ache or feeling nauseous for the rest of the day, and it ruins it. While for other people, they don't enjoy the real slow rides. And then once we get to the top of the Ferris wheel, they're looking out across it. They're like, why did I do this? I didn't really enjoy it. I regret it. There's always another option. There's so many different choices of rides. We don't have to force ourselves into doing things that we think is that right choice. At the end of the day, everything we do, we should try to enjoy. With limited time, with limited resources, and limited bandwidth and capabilities, we should be trying to make the most of every situation. The second channel's now live for investors. Make sure you head over, subscribe, turn your bell notifications on. At the end of the day, it's not only investing that's like a roller coaster, but life itself as well. When we think about it, there's lefts, there's rights, there's ups, there's downs. There's going to be difficulties. We can either try and avoid these things, but inevitably they happen because it's just a part of life. Or we can learn to embrace them, to adapt to the situations, and even try to potentially enjoy the bumps that come along the roads. As we know in markets, volatility can breed opportunity, and difficult times and different types of experiences can also breed that experience in our own lives as well. I hope you enjoyed this video. We're trying out this new style, so let us know your thoughts on it. A big thank you for joining us, and for now, stay well and happy investing.